Entered all your bookkeeping, but worried it's not right? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And one of the key things that we help people with is bookkeeping. It's one of those misunderstood sort of jobs where people think it's, basic data entry, anyone can do it, when in fact it is a profession and actually it's quite difficult. So I wanted to let you into a little trade secret in this video and also show you 3 sort of tricks, tips and methods to use to check your own bookkeeping so you've got the best shot at getting this right. So before I do, if you like these type of videos, make sure to click the subscribe button below so you get notified whenever we release more videos just like this one. So I said to you we would share a trade secret, and that trade secret is that bookkeepers get things wrong. Even professional bookkeepers and people that have been bookkeeping an awful long time like myself will get things wrong. The reason you normally don't see that is because they know how to check it. There's certain things you can do that really highlight errors, and what we want to show you in this video is those 3 key places to look to spot your own errors, and then you can go and investigate it. It'd be very difficult in this very short video to talk to you about how every potential thing that could go wrong, but I can tell you some really obvious and common things to check. Now I'm going to presume that you're in cloud software or accounting software. It doesn't have to be in the cloud, it could be a desktop version. If you're in a spreadsheet, while some of these concepts will apply, it's not likely they're going to be as useful because you won't have the access to the reports that I'm going to talk about unless you've got a really super duper type of spreadsheet. So let's presume you're in a Xero, a Quickbooks, a Sage, Freeagent, these kind of online things. And what would you check? Well, there's a few things I would check. The first one is I would look at when you did, let's talk about dates first, because this is quite important. You tend to reconcile your bank inside of the software. So you'd have keyed on all your invoices, whether digitally or manually or ever, you've got them in. You would have sent invoices to customers, you would have keyed on any invoices you received, any bills as it's often known in the software. And then you would have gone into your bank and kind of dealt with all the bank lines. And there'd be a date where you've done up to. So let's just say it was the 30th of April. So at the 30th of April, as far as you're concerned, you've done your bookkeeping. What you do, the first place I would go is I would go and check the accounts receivable report. Now what this is, you might often hear the term trade debtors. All it means is it's the amount of money that's owed to you by your customers or clients. Now if you're a cash-based business, let's say you sell online or something, obviously those should all be zero. If you get paid the instant that it's ordered or even in advance, we'll talk about advance in a minute, but if you get effectively paid at that instant for that product, that should be nil because you're dealing with that inside the software as it happens. Now if you're not, and you have got figures on there, then you've got to have a look at them. If they're positive balances, it means that you're owed money from those clients or customers. So the first thing to check is, does that feel right to you? You're the business owner. You know if you're owed that money. Or one of the interesting things about this check is if it turns out that you're looking at it for, oh, actually, do you know what? They haven't paid me. Then fantastic. The bookkeeping's done its job. That's what it's there for. It's to prompt you to go and look and investigate these things and get money off for people. But ultimately, if you look at it and think, yeah, oh, actually, they paid me £30 cash last week and I've not marked it off in my software, which is very common, then you go in and deal with it in your software. So in that example, you would pay it to petty cash or whatever you've got set up in your software. Or if you're a sole trader, you might put it to owner's drawings because you put it into your own pocket and spend it somewhere. There's lots of ways of doing it, but that's just a prime common example of you see a lot where it's like, actually, it's already been paid. So positive balances, you're looking for a sanity check, really. Are these real balances? If not, go and investigate them. Now, negatives are the most obvious error. If they're negative, unless a customer's paid you in advance, as we just said, or they've overpaid you, there shouldn't be any negative balances. There can be potentially other rare reasons, but they're the normal couple that you would have to have a minus balance, is because if you imagine you've received this money in and you've not got an invoice to match it off against, and that's normally because they paid you in advance or they've overpaid you. Now, it could also be things like you've dealt with it on your bank screen, so you've gone, oh, that goes to that account, and you've not yet raised the invoice because you hadn't remembered or something like that. So you can go in, look at those and make some decisions about how you're going to correct it. And at the end of it, you should have a beautiful report based on that date we said. So whatever you choose, so if it's you've done everything to the 30th of April, bring the report up at the 30th of April because that will tell the kind of true picture. I wouldn't do, if you're doing sort of historic periods, be very careful about doing everything to one date and then bringing all the reports to another date because you're kind of looking at 2 different periods. So at that date that the bank was finished and everything was kind of reconciled as far as you were concerned, you want nice clean balances. Does it look right? Is this right? As the business owner, is this right at that time? So that's the first check. The second check is very, very similar, and that's with the accounts payable report, or what you might know as the trade creditors report, or supplier payments. Like this is money you owe out to people you deal with, so some of your suppliers and the like. And again, it's a very simple report. Pull it to that date that you know is a good date and have a look. Again, positive balanced sanity check. If you've got a receipt on there for Sainsbury's for 25.02 at the petrol station, it's unlikely you still owe them the 25.02. It was probably paid on a personal card or something else that's not been dealt with in the software. So again, you'd go into the bill, sort that out. If it's negative balances, it's the same thing. Unless you've overpaid someone or paid someone in advance, it's likely that you just haven't had the invoice off them yet, or you've paid it to the wrong place or things like this. Sometimes you see it with utility bills. People are paying payments to this sort of name, this account, and they haven't had the utility bill for the quarter yet. And then you think, okay, well, it is a minus, but I do need to go and get the bill. So there's lots of reasons why that could happen. But most of the time, it's a big red flag to say, actually, there's a problem here in this, somewhere along the lines that we've got to deal with. So they go, negative balances are a big one, and positive balances, sanity check again. Do you really owe this? And we see it all the time in clients' bookkeeping. There'll be like Wix receipts or B&Q receipts, which you know were paid at the point of sale. In fact, sometimes if they've got the digital receipt, you can even see the card number on it and you know it's not the bank card number. So they're the kind of things you're looking for on that. And then finally, along this theme, I would go and check the balance sheet. So it'd be called the balance sheet in most of the softwares. There are other names for it, but normally that's how you'd find it. It's normally an accounting report. Don't get too worried or scared about the fact that it is an accounting report, because what it starts to show you is the true position of your business. So again, pick a date for that report that you're happy with, the data in, and then go and look at all the balances. Start with the bank balance. If you pulled up your app on your phone and saw that the bank balance using the 30th of April example is 10 grand and 1 penny, when you pull the balance sheet report up at the same date, is it £10,000 and 1 penny? Whatever the balance is, it should match. If it doesn't, there's an investigation there, and that's quite a common one. You think you've sorted all your bank, and it turns out that when you bring the report up, it doesn't show the right bank balance, and that's a very, very common mistake. That one's probably an entire video in itself if I was going to go and show you some of the areas to go and look at, but do know that then at that point there's something going wrong. And then you work your way through the balances. If you've got amounts owed to the revenue, to HM Revenue and Customs, are they actually true? If not, go and look at them. Are there minus figures where there shouldn't be minus figures? And normally this balance sheet's broken down into kind of stuff that you own and your assets. So it might be like computers, vans, and then it'll be your bank balances, PayPal balances, Stripe balances, those kind of things. And then you might have underneath it, you normally have money that's you owe out. So it could be other taxes, it could be that trade creditors total that we were talking about, the amounts owed to suppliers and things like that. And at the bottom, there's a bit about, money, sort of profits and money out to you and things like this. But you're really looking at the balances in the sort of top 2/3, and just go through them and have a look and just think, do they look right? Again, do you owe this money to Revenue and Customs? What's the deal? And some of those, they're not instantly easy to understand, and you might want to talk to a professional about what they mean, but just generally you can spot things. Like if you've got a team and you pay your staff, there's often a wages control account or a payroll control account, and that shows the amounts that are owed to your team. Should be nil most of the time because you'd have paid them exactly what's on the payslip. But do you know what? People make errors all the time, both in the data entry and also in the payments they make to their team, and quite often there'll be a small variance on there, and you're going to go and have a look at it. So, and again, same sort of thing, minus figures are a big red flag, and you're going to go through and have a look. And if they're positive figures, you're looking for that sanity check. And that is exactly where I'd start off every bookkeeping job ever, is go and have a look at those 3 balances to start with and then go from there. The bank balance being correct is an absolute must. If it shows in that, using that balance sheet report, that it matches your statement, you're in a really, really good place to start with. But you can often find that the mistakes in that bank are found by looking at these other couple of reports. And there's loads of different ways of tackling this from a bookkeeping point, but I found over the years of working with clients that this is quite 3 easy checks to highlight where there could be problems. So there you go. If you've enjoyed this type of video, please make sure to subscribe and share it with anybody in your network you think needs to know. And I'll see you in the next one.